Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this particular video, I'll be walking you through in detail part 2 of equity. Here we'll be covering stock dividend, stock split as well as non-governmental not-for-profit entities net assets. So let's dive into to understand more in detail about remaining things of equity in this part 2.
So we are continuing with the equity. So far we have covered three main topics under the equity, which is like classification equity, issuance of stock, and treasury stock transaction. Now we are jumping onto the dividend and stock split. Then we'll take at other topics in the equity, which are like kind of miscellaneous topic. Then we have two special topic. One is for non-governmental, not for profit, and one is for partnership. So we'll be covering in next 1 hour all these four topics, right? So first, let's jump into the fourth topic, which is dividend and stock splits. So dividend, dividend we all know, like on the equity shares or on the preference share, company do provide dividend, right? On preference share, there are preferred rate of dividend generally, which is agreed on the face of the preference share in itself, and that can be accumulated or that can be non-accumulated, right? If it is an accumulated, then you can accumulate period over period and can pay when you have actually profit, or when it is non-accumulative, then it will become your liability at the year end when it is being due, and you need to pay accordingly. And now coming to the stock dividend for equity. Stock dividend for equity, it can be in cash, it can be in property, it can be script, or it can be liquidating dividend, or it can be stock, which is like additional stock issues in lieu of dividend. So we'll be discussing one by one that in detail. But before jumping into the type of dividend, let's understand what are the three important dates which you need to keep in mind for making appropriate accounting records for the dividend. The first one is date of declaration. So date of declaration is generally the date in which board of director approve or declare the dividend. So that date is called declaration of dividend. Once board is approved that this much percentage of dividend or this much amount of dividend they're gonna pay to the equity shareholder, at that point of time you need to book the liability, which is your dividend payable, right? What will be the journal entry for dividend payable? What will be the journal entry for a dividend payable? From where we pay dividend?
We pay dividend from these reserves.
Yeah, retain earning,
Yes,
right?
correct.
So retain earning generally have credit balance. So you'll be debiting retain earning
To propose dividend, like
and crediting dividend payable,
payable, or we
right?
propose dividend initially.
Yeah, you can say proposed dividend or
Okay.
dividend payable, because once proposed dividend is before declaration. That
Okay.
means management has proposed to the
Shareholders,
to the board of director,
board of directors. Yes. Okay.
right? And board of director, once they approve in a board meeting, then it is called declared.
Hmm.
So once it is
And
declared, it is payable.
और
Okay.
जब पे करेंगे then we'll debit
We are
the
coming to
accrual
yeah.
and towards the cash, right?
Yes, we are
Against.
coming to that. Date of recording. So to whom you need to pay the dividend, right? The shareholder whose name appear on the stockholder register or records at the time of declaration. So for example, you have your board of director have approved or declared the dividend on 31st January 31st December 2022, right? To whom this dividend is being payable? The registered shareholder on 31st December end 2022, right? For example, let's assume a company like Microsoft, IBM, TCS, Google, right? Or maybe Intel, HP, General Motors, their stocks are being listed in New York Stock Exchange, right? NASDAQ. So the people might be buying and selling throughout the day. So to whom actually you need to pay the dividend? Isn't it very difficult? to identify the people to whom you need to pay the dividend. So if the dividend is being declared on 31st of December 2022, so all the shareholder who will be having the share of the respective company at the end of 31st December 2022 will be getting the dividend, right? Payment can be different date, right? Declaration, let's assume, has happened on 31st December, and payments, let's assume, happening on 15th of January, right? So you'll be paying on 15th of January to the people who are registered shareholder on 31st December 2022. So these three dates are very important date, and these three things you need to keep in mind. Any doubt here?
No, sir.
So now let's understand type of dividend. Cash dividend. Oh, sorry. Let's come back to what Gurmeer has just shared. When you are paying the dividend, at that point of time, you'll be releasing the dividend payable. So you'll be debiting the dividend payable and crediting the cash. So you're reducing the cash balance because you are paying the cash to the stockholders, right? So left hand side is clear, important date and the journal entries on those date. Now coming to the right hand side, which is type of dividend. Type of dividend, we discussed recently an example for the cash dividend. But there may be possibility that company do pay dividend in property. The company do pay the dividend in script, or it may be company getting into the liquidation and paying the dividend from the liquidity. Or there might be a possibility that company do pay stock dividend also. Stock dividends mean, do you remember stock dividend? I think we have covered somewhere earlier or not yet.
Bonus है.
Hmm?
Sir,
No, bonus share are separate than the stock dividend.
सर स्टॉक्स को डिविडेंड की तरह दे देते ना सर,
और
मतलब
स्टॉक्स इशू कर दिए
और स्टॉक
बेसिकली।
इशू कर दिए डिविडेंड की तरह.
So for example, company do have 1 million share, right? And instead of paying, let's assume company do have 1 million share of $100 each. Total share capital is $1 billion. At the end of the year, company wants to declare 5% as a dividend. So how much is it? 5% of 1 billion is $5 million,
Yes, sir.
right? So
Yes,
instead of paying $5 million in cash, what the company said will give one equity share to the how much? 20 equity shareholder, right? Isn't it 5%?
Yes, yes.
Let's do a math. Let's do it. So let's assume this example. Here we have, shall I remove this? Right? Here you have 1 million share of $100 each, right? At the end of the year, company declared 5% dividend. So 5% of it, this into 0.05, right? This $5 million, and they said we'll give this divided by 20. So we'll give 50,000 share to those 1 million share. Agree?
Yes, sir.
Right? Now let's assume Ayush has 10,000 share of this company. Now the Ayush will get how much new additional share?
500.
500 share. So after the dividend, Ayush has how much number of share?
10,500.
10,500. So let's assume the market value is, let's assume, $200,000. Right? So now what is the market value of the shares which Ayush do have?
So 10,000 divided by 10 lakh is, I suppose, 10%, तो 20 lakh shares हो जाएंगे. मार्केट वैल्यू में मतलब सिर्फ।
right? So 100 and 200. So the book now earlier the market value of Ayush share is this multiplied by this, and now the market value of his share is this multiplied by this. So he'll be happy to have stock dividend rather than cash dividend. Why?
सर कैश आउटफ्लो बचाने के लिए कर सकती है ये कंपनी।
Two things, two benefits. So to the company, the benefit is cash outflow. But if you see as an equity shareholder, how much investment you have made? This multiply by 100.
Yes, sir. 10
And
lakh.
how much you are getting?
21 lakh.
21.
You are getting 100,000 more value. So actually you are getting, right?
Right.
So it's being a win-win situation for both the company if company is growing. If company market share is shrinking, then why do they pay dividend? Right?
Right.
So that is called stock dividend. And scrip dividend, have you heard this? Scrip dividend? Scrip dividend is also similar to the stock dividend. A scrip dividend is again a new share of an issuer stock that are issued to the shareholder instead of a dividend. Scrip dividend may be used when issuer have too little cash available to issue the cash dividend but still wants to pay to their shareholder in same manner. So generally dividend is committed now but paid later to better manage their cash flow. So that scrip dividend is also similar to stock dividend, right? Property dividend, like instead of cash you are giving property of equivalent value to the shareholder, right? For example, like sometime company do have excess land, building, or maybe motor vehicle, something like that. Instead of giving cash, they provide such equipments or maybe like land, building, or property to the shareholder, right? So type of dividend can be cash, property, scrip, liquidating, or stock. Any doubt here?
Sir, जब प्रॉपर्टी कंपनी दे रही है एज डिविडेंड तो उसकी
Fair
what
market value.
was एंट्री?
So very good. Like payable entry will be same. What will be the payable entry? Retained earning account debit to
Proposed dividend.
dividend payable, right?
Yes.
When you are making the payment at that point of time, dividend payable account debit to the fixed assets.
Okay.
Instead of cash, it will remove fixed assets.
At the market value as on the
Fair
date.
market value. Fair market value.
Fair market value. Okay.
Right? So let's look at an example. 20% stock dividend to existing shareholder. Existing number of shares is 100,000 of fair value each, issued at $10, and the share capital is 100,000. Stock dividend 20%, 20,000 share. So journal entry is stock dividend account debit to issued share capital. That is, there is no financial impact. Share capital after the dividend will be 20,000 share at the rate of $8.33 because now you have 120,000 shares, but the value is $1 each is the face value. Shareholder interest remain the same, but the carrying amount per share will go down with the stock dividend. Right? Make sense?
Yes, sir.
Next is stock split. What is stock split? Division of one share into multiple share. For example, your company do have one share of $100 each that they want to split it to 10 share of $10 each. So total value remains same, $100, right?
Right, sir. Number of shares बढ़ जाएंगे.
Only the number of share will change, right? Number of share change, value per share also change, but the overall share capital in the financial statement remain the same. That is called stock split. Why do company do stock splits?
सर इसलिए करती है क्योंकि जैसे कुछ शेयर्स जो ट्रेड हो रहे होते हैं उनका जो मार्केट वैल्यू होता है एक्चुअली में बहुत ज्यादा हो जाता है, तो उसको स्प्लिट करने के लिए मतलब क्या होता है ना, थोड़ा
Reduce कर
लो
देते हैं।
वैल्यू पे लेके आने के लिए दे डू दैट। सपोज
Yes.
एग्जांपल अभी आईआरसीटीसी का शेयर था विच हैड रीच्ड 2500 हो गया था कुछ, उसको फिर स्प्लिट करा था, फिर वही 700 का शेयर हो गया था उसका वापस से, तो वो इसलिए ही करा जाता है बेसिकली कि फीजिबल रहे मार्केट के अंदर भी।
Any other reason? Any other reason you guys can think of? Yeah, Gurmekar, Kashish, Akash.
No idea, sir.
Yeah, so one good reason is like which Ayush has shared, like sometime your stock is so heavily prices that like normal people feel difficult to purchase in terms of full shares, and part share are not allowed to be traded. So for that reason, it is always advisable to do the split of the shares so that the number of transaction will be more, right? Second important thing is like when you have to give like this stock dividend, right? If your volume or value is so high, so at that point of time there would be a lot of fractional comes up, right? But you cannot issue the fraction shares to the shareholder, and to the shareholder whom you'll be giving less share than what they are mathematically you can say required to get, right? So then it will be kind of dissatisfaction on them. It's better always to do the split of the share so that the appropriate number of shares has been distributed as a stock dividend to the shareholders, right? And there are some other reasons also. Sometimes like you're planning to do a capital restructuring, so at that point of time also you can think of doing a stock split first and then go for a restructuring where you are reducing the number of share and adjusting against the losses, right? That also we'll discuss in other equity topic, but high level these are certain reasons which I have experiences of doing the stock splits, right? So if you see, we have covered topic number 4, which is dividend and stock split. So dividend has two important things. One is the dates which you need to keep in mind, and second is the type of dividend you need to keep in mind. And the stock split is the reason and what is stock split is and how it will impact the financial statement. So there is no impact on the financial statement, but only the number of shares and the value per share will change, but the total math remains same. Sounds good? Any doubt here?
नो सर।
So just
Okay.
stock split करते हैं, so there is no implication on financial statements. So हम disclosures देते हैं फिर.
Yes. So disclosures are mandatory. Like for example, you have seen this financial statement. So here, if you see common stock is 1 cents par value, right? So this way you need to disclose, and you need to also disclose how much number of shares do you have. That will also be disclosed in the note of equity, which is note number 20. If you go there, so there you will see how much number of shares are there.
Okay.
Okay, topic number 5 is other equity topic. First one is how to calculate the book value per share. Book value per share is very simple. Total shareholder equity. Total shareholder equity is basically your total assets minus total liability. And after that, reduce if there is any preferred stock or any dividend pending on the preferred stock. So that is your total shareholder equity value. Divide by number of shares outstanding is your book value per share. Simple math. So for example, this we are doing. Let's assume you have $1 billion of share capital, right? And you have, let's say, total assets. Let's assume you have $5 billion. Total assets, you have $5 billion, and then you have total liability. Let's assume $3 billion. Right. So your total equity. Your total equity is how much? $2 billion. Right. Let's assume you have preferred stock. Assume you have preferred stock of $50,000. And you have, let's say, preferred stock dividend. Let's assume 10%.
सर वो 50 million लिख दिया सर preferred
हाँ,
stock
50 million.
अच्छा
ठीक
उतना
है
ही लिखना है ठीक है
ठीक है बिल्कुल।
Right. So this is, let's assume your, sorry, this is preferred stock dividend pending. So what is net equity shareholder fund is how much? 145. Right. And what is the number of equity share? 100,000. Sorry, 1 million. Right. And what is book value per equity? This divided by this. Right. This will be your book value per share. Right. This is how you need to do the math. Make sense?
yes sir
Now, say next up.
इसमें भी हमने बुक वैल्यू सर एंड में लिया है गेस 145 को करके
क्या say that again?
सर इसमें भी हमने बुक वैल्यू 1 मतलब एंड में ही लिया है उसको जैसे नेट इक्विटी शेयर होल्डर फंड जैसे सर हमने लास्ट टाइम किया था
Yes. Yeah, equity comes always in last. When everything is paid off, then only whatever is the amount remain is available for the equity shareholders.
Got it, sir.
So next topic is division of capital structure. So permitted in some state to eliminate the accumulated deficit. Once the accumulated deficit has been eliminated, the entity is allowed to pay the dividend again. So this is kind of a restructuring of capital. I know some of you might have heard this word, restructuring of capital. Have you guys heard about it?
yes sir
When the company is continuously running into the losses, right? And then they need to look at the fair market value of the assets they have, right? And the other estimated, you can say, fair market value of the other assets, and do the re-evaluation whether the book value and the fair market value have a huge difference. If such, then you need to do the complete fair value assessment of your assets, and then you can adjust the losses against the share capital, right? And then you can also think of doing like splitting of the share and reducing the equity share capital and reducing the your retained earning from the capital losses which you already have, so that it will be kind of cleaning up activity of your assets and the liability. That is called restructuring of the asset. Some state do allow and some state do not allow this kind of activity. So what actually we need to do when we do the reorganization of the capital structure, first we need to do the revaluation of the assets on the balance sheet date, and we need to make all those assets at the net realizable value. For example, let's do an example here. Let's say this is your assets. Let's say book value. And this is your NRV. Let's say you have land and building, plant and machinery, and then you have computers, and you have other assets. Let's assume these are the assets, and on the liability and equity side, you have accruals, loans. Okay. Let's assume this is your T account kind of, and this is all at. So here, let's assume we have $1 million of land and building. You have $2 million of plant and machinery. You have, let's assume, 100,000 of computers, and then you have, let's say, 900,000 of other assets. So this is, let's assume, is your total book value. And on the other side, you have, let's say, accruals of 100,000, sorry, $1 million, and you have loans of, let's assume, $1 million, and you have equity, let's assume, $2 million. Okay, right? Let's assume these are the facts given to you. And the net realizable value of land and building, let's say it is 1,200,000. Let's assume this is your $1,200,000. Whereas your plant and machinery to have value of, let's assume, $700,000, and your computers have just $20,000 value, and your other assets, assume, have, let's say, $480,000 value. So now, if you see how much is the overvalue of your assets, how much is overvalue of assets? Can you do the math with me? 16 होगा ना?
Yes, minus 2.
$16,000, right? And now this $16,000 you want to adjust from the equity, because you want to make all the financial statement at the net realizable value, which is being more reasonable. So 4 का तो फिर भी प्रॉफिट हो ही रहा है इनको.
प्रॉफिट कैसे हो रहा है सर? पहले तो इक्वली लोन्स जाएगा सारा उठ के, इससे सेट ऑफ होएगा एसेट से. सबसे पहले तो विल पे ऑफ द लोन्स.
No, this is just reorganization of share
Reorganization.
capital. So we are not getting into liquidation.
Okay.
Right? What you are saying is liquidation of account. But here we are just doing restructuring of equity. So in the restructuring, you will be having the new here will be this. So there will be a reduction in equity of $1.6 million. And then your new balance sheet will look like this. And your liability will look like this. Right? That is called reorganization of share capital or restructuring of share capital. So here there may be possibility first you do stock splits and then you request each shareholder to forego their part in this proportion, which is 80%. Right? For example, Ayush has, let's say, 10,000 shares in this company. Right? So after this reorganization, Ayush may have only 2,000 shares. Make sense?
So makes sense.
So that will be the loss for you. So the step involved is first asset revaluation. Assets are revalued at NRV, but there is no assets increase. So any loss on the revaluation increase the deficit. Then deficit adjustment is adjusted either by donation of the stock from the shareholder or reduction in per value of the share. So either, like for example, is a $2 million share, equity share they have, right? Let's assume this is, so here, let's assume par value is 100 each. So it may be possible that shareholder will be having this divided by this number of share. First is that they have 20,000 equity share of 100 each. Now after restructuring, how much is the number of shares they have? This multiplied by 0.2. So they have only 4,000 equity share. So there is a reduction in share in hand of 16,000. One possibility is that. Second possibility is that the value of the share will go down. That is mean stock split. So this 100 share is being, let's assume, gone down to 10 each. So now they will be having this multiplied by 10, this much number of share. So after the split will be this much number of share will be having. Make sense? Yes, no?
Yes, sir.
So if you see what it says, deficit is adjusted either by donation of the stock from the shareholder. That means this 4,000, this 16,000 stock donation. Right? Or there may be reduction in per value of share. So there may be possibility that you may have same number of share, but the value per share will go down. Instead of 100, it will be $20 per share. Instead of 100, it may be $20 per share. Then you will be having this multiplied by this. Getting my point? Ayush, Akash,
Yes, sir.
Rashesh, got it? So there are two possibilities. Either the number of share will reduce or the value per share will reduce. Yeah, Kashish.
So थोड़ा सा confusing लग रहा है, clear नहीं हो रहा.
Simple. Like if this is the value 2,400,000, that means $1.6 million we have a share capital which is excess over value.
Yes, sir.
Right? This much you need to reduce and bring it down to $400,000. That is clear?
सर इसमें से इसको माइनस करा क्योंकि
Right? So that 400,000, how will it reach? Either you will be foregoing 80% of your equity share. That means earlier you were having 20,000 share of 100 each, which is $2 million.
Yes, sir.
Right now you have 4,000 share of 100 each, which result into 4 million 400,000 equity. Right? Make sense?
Yes, sir. Yes,
So you have foregone 16,000 equity share. One is that case. Second, if you are not reducing your share, number of share, then there would be a reduction in the value of per share. So value per share will go down to $20 per share, and your share will remain same, 20,000. So 20,000 multiplied by 20 is $400,000. Right? So this reduction will either number of shares from 20,000 to 4,000,
yes,
right? Or
reduction in amount.
and per share value from $100 to $20. Then only this amount will arrive, right?
Yes,
This is what it means. Right, Gurmeher? So, Gurmeher.
Yes, sir. Yes, sir.
You need some coffee?
रिकॉर्डिंग लेनी पड़ेगी लास्ट के 10 मिनट की.
No worries, no worries. We are about to finish this. Few more minutes. Right? So this is what the division of capital structure or reorganization of capital structure. And then coming to the disclosure part. For the equity, what all disclosures are being required? Your dividend, your liquidation of preference, participating right if there is any, call price, call date if any, conversion or exercise price, exercise rate. If you are maintaining any sinking fund, then you need to disclose that. Any unusual voting right you have given, that you need to disclose. Any significant terms of contract to you issue additional share capital, that you need to disclose. Number of share issued upon conversion, exercise, satisfaction of the requirement, condition, financial instrument with down round features, and effect of down round feature if any, or additional rights upon liquidation if any given to the preference shareholder. Those all things you need to be separately disclosed. Now coming to the last two topics. First one is non-governmental, not-for-profit net asset. So for the non-governmental accounting, which is not-for-profit entities, for them, instead of equity share, it is called a net asset position. So this we'll be discussing more in detail in the governmental accounting chapter, which is chapter 5, right? But high level, just understand there are two type of capital. One is net asset with donor restriction, and the second is net asset without donor restriction. So without donor restriction is like free reserve or free cash, which you can utilize for any purpose. But with the donor restriction mean there might be a possibility that user donor may restrict for any specific use. That means, when you are doing a fundraising activity, let's assume you are an NGO, not for profit organization, right? And let's assume you are working in a Louisiana state, right? Let's assume you're a church and you're working in a Louisiana state, and unfortunately there was a flood, and now you have done a flood donation camp, right? In that you have got a contribution of, let's assume, $1 million, right? That $1 million money which you have received is only and only to utilize for the supporting the people who has been gone under the financial stress or under any other physical challenges due to the flood at the Louisiana, right? But you cannot use that amount for the, you can say, construction of the building, or maybe for any student education, or maybe for any other purpose for which you have not collected the money, right? For example, if you have received any funds from the user, right, any funds from the public for the coronavirus support service, right? So the fund, if you remember back in 2020, in India also they have raised the fund in the PM care account for the coronavirus. Do you remember that?
Yes, sir. PM relief fund.
Yes, you guys have so the fund which we all have been contributed must have to be utilized only and only for the COVID care service. It should not be like to build some building of the government department or for an NGO, or should not be utilized for any other purpose, right? So when donor is giving the fund for any specific purpose, then the utilization must be for that purpose only, should not be utilized for any other purpose. That is called donor use restriction. Make sense?
Yes, sir.
Yes.
Right? And then there are certain donation which donor give or donor commit to give, and those are based on time. Right? For example, I am a donor of a church, and I said to the church, I'll contribute $1,000 every year for the child education up to 5 years of the for next 5 years, right? So here I have donated $1,000, and I have given a commitment that I'll donate $1,000 each year for next 4 years more for the child education, right? So here they got a commitment of $5,000, but the actual cash they'll be getting year over year, right? So there is a time restriction when they are receiving the fund for the utilization for this purpose. Make sense?
Yes, sir.
So there are two type of restriction from the donor. One, it can be time restriction. Other, it can be use restriction. If there is no restriction, for example, we go to the temple, right? We go to the church, or we go to the Gurdwara, and we donate certain amount in cash. So that is unrestricted cash. That means we do not give any specific instructions to those temple, church, or Gurdwara that amount which I am donating, you must be using for this purpose. That is a free will donation which we give. And they are free to utilize that free fund for any activity to run the temple, Gurdwara, or church, or any social activity they wish to do. Make sense?
Yes, sir.
Yes, sir.
So not-for-profit entity must disclose the net assets based on external donor restriction and internal board delegation of the net assets. So this we'll be discussing more in detail in chapter 5, but this topic is being connected here with the share capital. So I thought just to give you a high-level overview. So in these 3 points, you will see like couple of questions in the equity chapter also, right? Any doubts so far?
No, sir.
Oh my God, you guys are looking sleepy. Need some water.
So next class we will do practice for this equity.
Yeah, that's your homework. That's definitely will do few, but I would request each one of you to do some practice at your own as well and come up with certain doubts and questions. Right? Last topic of the day, partnership. What is the partnership? What is the definition of partnership?
So when two or more people come together with a defined contract on profit sharing, loss sharing, and equity sharing, uh, perform a specified business for the purpose of earning profit is called partnership.
How about others? Kashish, Gurmehar?
Sir, agree with Akash.
Ditto, huh? गुरमेहर सिंह बग्गा.
हो गया सर।
सर उसने इतनी अच्छी प्रॉपर डेफिनेशन सुनाई, इसके अलावा और क्या मैं बोलूं अब।
Oh my God.
3:45 बज
Okay.
चुके हैं, आप मेरे से डेफिनेशन पूछ रहे हो इस टाइम।
भाई आपको सो जाना चाहिए वैसे 3:45 बजे मैं तो सो जाता
What is the definition that Ayush has shared?
सर जो भी डेफिनेशन दी है बिल्कुल ठीक दी है, इतना पता है।
I'll watch in recording, huh? One more time. Oh my God. So when two or more person join the hands together to do some business activity, is called partnership, right? What are the characteristics of a partnership? One is the limited. So we'll be understanding 5 things in partnership topic. One is characteristics. What all characteristics of partnership? Second is partnership account. How you need to maintain the partnership account. Third is distribution of partnership income or loss. Here it is different than how we do the accounting in India, as well as taxing in India. Fourth is change in partner and the partnership liquidation, right? So characteristic of partnership: limited life, because there may be a possibility of death, retirement, bankruptcy, incapacity of any partner, which may result into the liquidation of the firm or change in the firm, right? Second is ease of doing business, or you can say ease of formation. For a partnership firm, you need to incorporate the partnership firm. It is, both of you, like two partners, just need to join the hands together, discuss and agree the objective and the profit sharing and capital investment, put into the small piece of paper and notarize that as a partnership deed, and it's done, right? Whereas to incorporate any company, a lot of additional formalities and cost involved. Third is it's just a mutual agency in the eye of the law, right? And fourth thing is unlimited liability. What is unlimited liability?
सर दे आर मतलब कोई भी लाइबिलिटी के लिए दे आर पर्सनली लायबल टू
Yeah, personally liable for any activity or any wrongful act done by other partner or the partnership firm or on behalf of the partnership firm, right? So that's the reason new formation of the partnership has came, which is limited liability partnership or LLCs, right? But general partnership always do have unlimited liability. Last one is organization, no tax. So organizations, one second, let me rewrite this for better understanding. No tax to organization, rather partners consider their share of profit into their individual income. So some of you might have done like regulation class. Any of you have done reg class? Any of you have done regulation class?
No, sir.
Not yet? Okay, so in the regulation, the partnership firm or S corporation, they are considered as a pass-through entity. So this is difference between like how we do taxes for partnership firm in India and the partnership firm in US. In the partnership firm, the profit share of the partnership firm is being transferred to the partner account as their business income, and it is being taxed in the hand of partner. Whereas in India, partnership firm is considered as an independent entity, and the profit of the partnership firm is being taxed in the hand of partnership firm itself. And net profit, when it goes in the hand of partner, it is exempt, right? Whereas in US, it is being taxed in the hand of partner. So in the partnership firm does not pay any taxes, right? Whatever is the profit before tax is being transferred to the partner into their profit sharing ratio, and then it is being taxed in the hand of partner. Make sense?
Yes, sir.
So it's deducted as the income tax.
No. For example, let me do a math for you. For example, Ayush, Kashish, and let's say Gurmehar are three partners, right? Ayush has contributed $50,000. Kashish contributed, let's say, $20,000, and Gurmehar contributed $30,000, right? And what is their total capital? Kashish, how much?
1 lakh, sir.
$100,000 is the total capital, and let's assume they all are working partner and they have 5:2:3 is their profit sharing ratio, right? Let's assume they got let's assume they got a profit for, let's assume they have earned a profit of $50,000, right? So let's assume this $50,000 is the profit. How it will be distributed? 25,000,
25, 10,
10,000, and then 15,000,
yes, sir.
right? So let's assume this is profit before tax. So in the US, this amount is being passed through to the individual account, right? Whereas in case of India, we'll be having a tax, let's assume at the rate of 25%. So how much is it? This multiplied by 0.25. This much is tax. So profit after tax is how much? 37,500, right? And now, how much is the profit share of Ayush? 18,750. How much percentage?
75.
75, and this multiplied by 30, right?
10, 11.
So this will go into the partners accounts, but this is considered as exempt. But this is considered as kind of partners in USA. Right? Make sense? Ayush, Gurmehar?
So थोड़ा सा confusion है. Exempt income in hand of partners in India. जो 25% था, that was organizational tax.
Yes, that is being taxed in the hand of partnership firm.
तो उसमें जो उनको जो remaining balance गया after deducting tax, अब उनको अपने income tax में it is exempted from their income tax.
Exempt income, yeah. So they
ऊपर
do
वाले में
to avoid duplicate tax, double taxation.
ऊपर वाले में उनको organizational tax नहीं लगेगा,
No
but जब उनको
organization
मिल
tax.
जाएगा, then once they pay their
It will
income
be
tax,
taxed
वहाँ
into their
deduct होगा.
respect. Yeah. So that will consider as their business income.
Okay.
So
सर
that is
बात तो वैसे सेम ही रहेगी क्योंकि वो इंडिविजुअली जब फाइल करेंगे तब भी
no,
वो
it depends. Na, in the corporate, for example, if there is a state 25% tax, but when it comes to individual, there are slab 10%, 15%, 20%, depends on which slab rate it follows. So there might be a possibility the person end up paying less tax or more tax, depend on the slab or bracket in which they are.
Got it.
Right? Make sense, Gurmehar?
Yes, sir. Yeah.
So that is the characteristics. Now partnership account. So partnership account has three type of accounts: capital account, drawings account, or it may be loan account also, right? In the capital account, generally investment of assets. So I would say here we should have plus sign. Investment of assets, partner share in profit, it should also be plus sign, right? Disinvestment or withdrawal, it should be minus, right? And then partner share in net loss should also be minus, and drawings should also be minus. So this is how your partner capital account may looks like. Make sense?
Yes, sir.
Drawings account is withdrawal by assets or transfer of balance to capital, or loan account is normal debit and credit account, right? Next topic is distribution of partnership income or loss. Distribution of income or loss generally include some combination of the following. It may be salary of some or all of the partner. It may be interest on capital. It may be bonus to the managing partner, or it can be distribution of the residual in a fixed or determinable ratio, which is like profit sharing ratio. So normally, if you see, if there is a partnership firm, there may be possibility that 1 or 2 person might be the full-time executive partner, or 1 or 2 person might be silent partner, right? So there might be a possibility like silent partner have done a capital contribution more, or the working partner has done the capital contribution less. So working partner might be withdrawing salary, or the partner who has contributed the capital, they might be also earning interest on the capital. Make sense?
Yes, sir.
Remember those school days, partnership accounting?
मुझे ऐसा लग रहा है वो
12th है सर
सर
ये।
12th है सर पूरी पार्टनर कंपनी वो सर वो गर्मियों की छुट्टियों में सर ट्यूशन वाले सर ना सुबह 8 बजे बुला देते 2 बजे छोड़ देते वो सारा पाठ खत्म से
एक उसमें होता था, एक होता था हिंदू अनडिवाइडेड ऐसा कुछ एक वो भी था।
yes, yes, yes.
और ये जो सर
Hindu
आप एक
undivided.
बॉक्स बना हुआ है ना इंटरेस्ट ऑन कैपिटल बैलेंसेस ये टॉपिक होता था उसके फिर 4 क्वेश्चन होते थे कॉल
Yes.
कर पा रहा हूँ मैं ना कि बहुत ही 12th में पहुंच गए हैं एकदम इसमें
Yeah, that is the reason like adaptive learning technology save a lot of time. Like I would say once you are done with the course now, choose the adaptive learning technology. It will save more than 70% of your study time.
Okay.
Because all these things you are studying from 11th standards.
Right.
And you are these all things are already in your blood.
ये तो सर मतलब वो है कि कहीं से भी उठा के पूछ ले बंदा तो चलो निकल जाता है
Yeah, accounting is very, very exhaustive. But at the end, we all are CPA, certified public accountant. At the end, we all are accountant. So if distribution is not mentioned in the partnership agreement, then all partners share equally distributed in income or loss ratio. Equal in both income and losses. Sorry, my bad. If it is not clearly mentioned in the partnership deed, then it is considered equal share in profit and loss. However, following factors are frequently considered in determining the income and losses. Few things you need to consider. First is relative assets investment of the partner, time investment, or experience, expertise, or education of the partner for the respective business to be considered. Next topic is change in partner. If there is any admission or retirement of a partner, that may result into dissolution of the former partnership and formation of the new partnership. I'm sure this is also you might have studied in school days. Like admission of new partner, assuming H and J share the profit and loss equally prior to any change in partnership, a new partner buy the prior partner interest. So instead of J, let's assume K has come. So excess paid for the share in the partnership to buy the J share is the personal gain of the partner, respective partner. For example, let's do this math here. Let's assume J and H, they both have capital, contributed $10,000 and let's say $20,000. Now Mr. J share is being purchased by, let's say, K, and K is paying $15,000 for it, right? So this excess is the personal profit of Mr. J. So in the partnership firm, the capital remains same. For example, Kashish and Ayush are doing a business. So let's say Kashish has contributed $10,000 and Ayush has contributed $20,000. And now Gurmehar wants to join the firm and Kashish wants to move out. So Kashish wants to sell his share to Gurmehar. So Gurmehar can purchase this share at $15,000, which is the capital of $10,000. Right? So 5,000 additional amount which Kashish is receiving is his personal gain in the partnership. Make sense?
Yes, sir.
Simple, like if you have a share, like, and after a year or 2 years, if you are selling those shares at a profit, it's your capital gain. It has nothing to do with the company. Make sense? New partner added by investment other than cash. So bonus to previous partner. Hope you remember, like when new partner is joining and new partner is adding certain investment which is other than cash, and there might be possibility that may result into the bonus. So how much bonus we need to pay to the previous partners who is being a retiring partner or who is a remaining partner in the partnership firm. So there are a couple of methods which is like goodwill method, bonus method, or goodwill method to the new partner which you can consider, and no impact of goodwill to the old partner account. Retirement of partner, retiring partner receive more than the capital balance, or retiring partner receive less than the capital balance. So that we need to understand. And last one is partnership liquidation. So there are 4 steps for the liquidation. First one is sale of assets and recognizing gain and loss in the partner capital account. Second is payment of the liability after selling of the assets, the amount which you have received. From that, you will be making the payments of liability. Third, if partner account is negative, either absorption of the deficit by other partner or additional assets contribution by the partner that he or she need to make, and find out the distribution to the final distribution to the remaining partner. Right, so we are done for the partnership also. So this is all in the equity. So if you see, we have covered classification of equity, issuance of stock, treasury stock, dividend stock split, other topics of equity. And then we have done 2 special topics. One is non-governmental, not-for-profit, net asset accounting, how they need to disclose the equity, like only the net assets. So this detailed topic is in chapter 5, which we will be doing in detail in the non-governmental, not-for-profit account and the governmental accounting. And then the partnership, we have discussed all category of partnership equities. Right? Any doubt?
No, sir.
Okay, so we are done for the day. So I'll send you the notes, go through the notes, do some practice. And if you have any doubt, any question, we can take up in the next class.
Sure. So notes भेज देना.
Yes, I'm sending right after this.
Sure.
Okay, enjoy rest of your Sunday and the week. So now, till this event, we'll be doing the classes on Sunday, 11 to 2. But immediate after that, in the month of May, we'll pick up the speed and we'll do more. We'll spend more time over the weekend to
Okay, sir.
finish the course.
Okay.
Right? Okay, bye bye.
Okay,
Thank
okay,
you,
sir.
sir.
Bye bye.